Welcome to the first of many series of tax talks by the CA Faculty of Taxation, where we aim to bring in more clarity on topics that are pertinent and timely to Sri Lanka's taxation landscape. And these podcasts will run in all three languages. We have with us today Mr. Denzil Rodrigo, who is a senior faculty member who will guide us through some of these changes, and we will discuss some of the very burning issues as well as some of the clarity that we have obtained in the course of our many knowledge sharing sessions. So, everyone is aware that the Inland Revenue Gazette was out, and the changes will be effective from the 1st of April 2025. The topic we're going to be talking about today would be the taxation of export of services on foreign income. And the purpose of this podcast is to give more clarity about this proposed change and how it could impact you. So, to start off, let me first give you an overview of what is the status quo at the moment before we dive into the topic. At the moment, the Inland Revenue Act has two exemptions. The first one, verbatim, is any service rendered in or outside Sri Lanka to any person to be utilized outside Sri Lanka where the payment for such service is received in foreign currency and remitted to a bank to Sri Lanka on or after 1st January 2020. And there is also a connected exemption for any foreign source where such gains or profits are earned or derived in foreign currency and remitted to a bank in Sri Lanka, again with effect from the 1st of January 2020. So, what's happening to these exemptions and what actually brings us to the table today, sir?
In fact, what brings to the table is that the concern is regarding the exports of services, which has got a broad-based exemption at the moment where you receive in foreign currency. Now that has been subject to a tax of 15%, subject to the amendments, the committee state amendments. And that is a major issue that is at the moment that people are concerned about. But I think you will have to took it from 2 points of view. Where that is concerned, that the other area that may come is employment income, where you earn it abroad, and of course when there are migrant workers, that problem won't arise. Subject to you just leave the country and you will be a resident in Sri Lanka, that will be a matter which will be taxable. And of course the other services which is at now, for example, if say if it's a company that's rendering services, you get the net figure, that is the remittance minus other expenses that you in earning that income. So where independent sources, where individual independently also, they should be able to deduct that amount, right? But when it comes to employment, in the contract, it is straight away the gross amount that will be taxable. So that is a major issue there. But let me also put it this way. The 15% is a tax that is put at this major concern. But at the same time, I would also say that one part of it, the practical point of view, sometimes we may say our budget has been prepared depending on the inflow of foreign currency from these services, and based on that only the budget was made. This at 15% is revenue that the government will get. But what I have to also consider is that slashing a tax also on this may sometimes we reduce the amount of these remittances coming to the country, which is a practical issue which had to be looked into. From the other side of the coin is that, in fact, the country is going through a major issue, economic issue, and we see that certain things have been now streamlined and corruption, etc. To that extent, I think there may be some sort of obligation also on our part to do some contribution in some way. So that's how we have to look at it. So
Right. So at the moment, we have an exemption, and into the future, you mentioned that there's going to be a 15%. So how does it work for individuals?
for individuals, as I told you, there will be independently they do their services. Sometimes they may do services for an employer outside the country. And in those circumstances, when independent services, he can deduct his expenses in doing this, and the net amount of the profit income coming into the country, then he'll be entitled to this 15%
So on the profits.
on the profits. But when it comes to employment, it will be on the gross figure. That
On the
will
gross
be, yes,
remuneration.
correct.
But the individuals can also enjoy the tax-free thresholds and the lower slabs.
Yes,
Is the
definitely. Yes.
understanding? Okay. So we start off with 1.8 million proposed
Yes.
tax-free threshold, and then we go to the first slab, which is 1 million at
5%.
6%, and thereafter you go to 15%. So where an individual is concerned, it is not flat 15. But when you come to corporates, how does it work?
Corporate will be flat.
Flat 15. But what happens if, now I spoke about there having to be so many conditions. The service has to be utilized outside Sri Lanka. The money has to be remitted to Sri Lanka. What if one of these conditions are not met?
Then there will be issue. You have to meet the conditions, both the conditions.
Let's assume hypothetically that they don't meet one of these conditions. In which case, would they be taxed at the standard rate?
Standard rate, yes. For corporate, it will be the 30, and for the individuals,
Individuals
it will
up to
be
36.
36.
All right. Thank you, sir. When it comes to the taxes now, we are concerned, we're talking about foreign sourced income.
Yeah.
When where the recipient is in Sri Lanka, the home country of the recipient is Sri Lanka, but the host country, which is a foreign jurisdiction, may have deducted some taxes before they sent this money here.
Yes.
So how does that work? Do we get a credit for that tax?
Yes. Now, for example, if he now he's going to be subject to this 15% rate, he is liable to tax on that. However, if there is a DTA with another country, then you go according to that, or you have a unilateral one where you can get credit for any taxes paid in that country. You get credit here.
Okay. So to sum up, if there is a taxation that is levied in the foreign country, you can use the double tax treaty as a relief. But what we're also discussing is the possibility of claiming a unilateral tax credit. So irrespective of having a double tax treaty or not, the Sri Lankan laws give an exemption, or rather give a credit for the relevant tax paid in that other jurisdiction. So that's good news. So basically, it doesn't mean that we are at a loss just because we don't have a double tax treaty. So we're moving on to the foreign source. Now we spoke about the export of services, and there were so many conditions that needed to be met. But on foreign sources, there's just two conditions. One is it should be a foreign source, and secondly, that the money has to come via the banking system. So what are the kind of activities that fall under foreign sources?
At the moment, anything which is foreign, it will come with under this purview.
Sure. So basically, if as a resident, if I have a global income, I will be taxed on any foreign sourced
Yes.
income in Sri Lanka.
In Sri Lanka.
There were some talks going around foreign employment income. Now,
Yes.
foreign employment income, does that come under foreign source? And if so, how will they be taxed? How will I have to pay if I'm employed by a foreign entity?
Now here one has to be a bit careful, because when you say when it's a foreign source and where you're rendering that service, in your foreign source. But the question is that when it comes to foreign sources, you are employed by a foreign source, and in Sri Lanka they have the rapid system here. So even if it's generally the employee is only liable to deduct and pay it, but here when it comes in here, the employer will have to be liable for tax, and he can go on the basis of, as the existing law, that is his income, he pays on this quarterly basis.
Okay. So there would be some level of guideline that the Inland Revenue will have to
Yes, they will have to give a guideline within the legal
framework of the
framework.
law.
Yes.
Right. Think so. And again, if the money is not remitted through the banking system, how
Then
do
there is
we?
a problem. Then he won't.
Then they'll, just like we discussed earlier, they'll
Correct.
be liable on the standard.
Then, because this is what happened now. But as I told you earlier, the whole budget was made depending on last year's revenue that came in. So if they bring it out, then the intention will be, if they keep it out, they say they don't want to pay taxes, then there's issue. And unless I told you, there's a bit of obligation also to pay some taxes.
Sure. So to balance things out, we have everyone has to pay a fair share of tax, and what that fair share is, what we're trying to dissect here. Primarily, there are two amendments that have been proposed. both to the exemption on export of services and the exemption on foreign sources, which will be removed with effect from 1st April 2025. So the law is not yet
only, yes.
pending committee stage amendments and the formal enactment.
Yes.
So once that is through, the relevant taxation will apply. There will be a 15% primarily on the profit from the export of services. If you're a corporate, flat 15. If you're an individual, then you're able to take benefit of your tax-free allowance, as well as the lower rate slab of the proposed 1 million. And is there any, if there's any foreign sourced income, then again, you'll have to bring it into Sri Lanka in order to enjoy this concession. So that is it from us on the listing.
One more
Unless you want to add
I would add
a little
this.
bit.
We'll give more clarity to this when the act is out.
Sure. So we are speaking with a limited level of clarity at the moment, because we are only basing our comments on the Gazette supplementary that was made available on the 8th of March, actually. So we'll have more clarity and we'll give you all more updates as we go along. So on that note, let me thank Mr. Denzil Rodrigo for sparing his time on giving us clarity on these two amendments that are proposed to the law. We will tune in with more clarity once we do have the relevant laws in place. So thank you, sir, and thank you for tuning in for the first of the many podcast series of the CA Faculty of Taxation. And do feel free to reach out to us if you do have any queries, and subscribe to CA Connect for more updates. Thank you.